Good morning, traders and investors. Welcome to Wednesday's edition of Pre-Market Info. Benzinga's Pre-Market Info brought to you by OptionsHouse.
OptionsHouse.
Options in the house. Joe, how was the concert?
Well, it was actually pretty fantastic, Joel. Thanks for asking. It was sold out. Got to reminisce, but actually, though, I think we missed on the ticket the part that said there was a look-alike contest because we did not dress the part to be in the show. But it was all about Christmas, and it was great to be back with the Trailer Park Boys and actually get to see them live and be up close and shake their hands. It was really neat. We had great seats too.
You got to shake their hands?
Yeah, well, Randy, if anyone out there is a Trailer Park Boys fan, Randy is the cheeseburger guy. He was actually selling raffle tickets in the crowd during the show. He was walking up and selling them, and then they did a 60-40 at the end of the show, so someone got to walk away with a bunch of cash and go have a drink with the boys backstage. And then, they were all in the crowd involvement, bringing people up on stage, stuff like that.
Yeah, did you run into Dana up there in Ann Arbor or not?
I did not.
Did not. Okay.
She wasn't at that concert, Joel?
No. I will check with her and see if she's heard of them because you guys, the old man hasn't. But Dennis, you're awake there? What's going on?
Hey, pretty quiet morning here. We've had a 9-point range overnight, so kind of significant. We got up there to that triple top area that you've been talking about 3 points off of it. We got as high as 1808. We have been as low as 1799, and we are hanging out here right in the middle, 1803 and a half.
Why'd we get, was there any news associated to get that little pop up to the '08 level? Or, because I thought I saw like an '05, '06 high, but I guess they made that '08 high last night. Well, we'll just look at the parameters from yesterday's trading, and we did hit the 1150 level, 1150 to 1250. That's your major resistance. That's a triple top Monday and Tuesday, and then also from the 29th. Coming back on the downside, I mean, this thing just can't get below 1800. Look, it's 1799 low. So as long as we hold above that 1799 pre-market low, good to go north again.
And just kind of hanging out here on the crude, actually, too. We had a pretty decent rally there. I believe it was yesterday. We've been kind of just hanging out here. We've been talking about the slow drift and possibly going to 100. We're down 12 cents today here on the crude. What are your thoughts today?
Yeah, it did take out the resistance at the $98 level. Kind of a little bit in a holding pattern here in the crude market. Let's take a look at today's trading. We got a 98.75 high, and I believe the high from yesterday was right at that area too. Let me pull it up real quick and get the exact number for you. Yep. Double top here. 98.74 was yesterday's high. 98.75 is a high so far in today's session. So we'll be keeping an eye on that as major resistance. And then you also have major support on the downside. The 4 lows in a row between 97.01 and 97.24. So don't need to worry about crude cracking until you get under that $97 level.
We are pulling back a little bit in gold. We obviously had the vicious rally there yesterday. Pulling back $8 here this morning, trading at $12.54. All the individual miners were trading up significantly yesterday as well. But what are your thoughts here on this precious metal?
Did we ever figure out? I mean, there was really no news associated, no numbers that came out for that spirited gold rally. So I'm just going to say this is just another blip up, and perhaps you got some people caught short there, scrambled after the 1250 level. We have missed yesterday's high by a good $5 here. 1267.50 was a high yesterday. 1262.80 here. Not a lot below that current low, 1252.10. I think you could slice right back down to that 1240 level.
Let's move on to the big mover of the day. It looks like it's going to be MasterCard, which is trading up $30 here right now. They announced a 10-for-1 stock split here last night after the close. The record date on that is going to be January the 9th. Brent, they also did a stock buyback and a dividend. You got some more details on that one?
3.5 billion buyback plan, and they raised the dividend to 110. That's still somewhat of
Quarterly
a of a
dividend.
of a pitiful yield. I think it's about a 0.5% yield.
Yeah, they're not a big yielder. This is a
Nah.
growth stock, obviously, which it has been growing. I guess it's been doing what it's supposed to do.
Same thing with Visa. Really weak yield there, but I guess that's not what they're used for. I guess.
Yeah, they're used for growth. And man, if
Right.
you've owned these companies here, and I know this has been one of the better ones in my portfolio, and I wish I still had it all. I sold half of it back, I think around 650. Joel's been riding me there, just looking at this game because this was one I've been in here for. I don't know how long have I been in this one, Joel. I'm thinking I'm going back to like 2010. Looking, yeah,
After
no, even before that, I
the
think it was 2009. I was in this thing right after the financial crisis and the whole 160, 170 area. So this has been one of my good ones here in my investment portfolio. I'm looking at it here, and I'm going to get a 10 for 1 split on this thing now. What are your thoughts on this puppy?
Well, it hit 800 in the pre-market. We have pulled back since hitting that 800 level, finding support at 790. So above 790 here, good to go to the upside. 800, nice round number. Probably run a few sellers ahead of that. Looks like over the last half hour or 45 minutes, we've been stopping. Someone's had an opinion here at the 796 level. So right now that is acting as resistance. I mean, once again, I will harken back to the fact that, yeah, they're splitting the stock. Yeah, they're increasing the dividend. But what does it really do to the bottom line?
Yeah,
Mastercard's got
but
to
it'll
be.
increase trading interest in this too. I know we were talking about it at Bright here yesterday after it, and a lot of people like to trade Visa with Mastercard. And Mastercard, obviously, it's a tricky stock to trade when it's a $763 stock, and obviously, or $793 stock. Obviously, it's going to become a $79 stock after this 10 for 1 split. So the slippage drops a little bit there, which obviously is good for anybody that's pair trading Visa versus Mastercard. It will increase the trading activity in the stock. Obviously, share volume probably increases tenfold because if you buy 100 shares, it's like buying 1,000 shares when it splits. So that'll increase the trading activity too. But it's been a long time since we've seen a stock split. When's the last time we've seen one? Like on a major company? Remember they used to come out, Joel, in the early 2000s. They used to see stock splits once a week.
You
As
bet.
I guess.
You mentioned that what was it, Warren Buffett, or who were you talking about saying like the appeal of a high price stock? Was that
Well, Buffett has always been against stock splits. He's went on the record multiple times saying he never wants to split his Berkey shares because, for a few reasons, it does cost the company money, obviously, to split the shares. There's accounting and there's all kinds of other stuff that goes into that to be able to do that. So it does cost money to actually split the shares. The second reason is he's always said he believes that it downgrades the quality of the shareholder population. So, when you've got this really super high price stock, he believes you get a little bit more shareholders that actually want to hold the stock long term, a little bit more. You're not getting basically these traders types, and it decreases the turnover in a stock too. He doesn't like his shares trading a ton there because he's all about the investment, not about the long term there, and he's not a real trader. So I think those are the main reasons he's always been against stock splits. But it seems like lately that all the companies are kind of following his model.
right? If it doesn't hurry up and split soon, I mean it's going to be a triple digit stock because it's going to be at 1,000, and that's going to take it down to $100. So they better get
January the 9th is the date, the record date, and then I think it actually, yeah, so it's January 21st is when they actually get those shares. So early next year, we're going to see MasterCard 10 for 1 split.
What's
Yeah, because there's companies like you think potential like Google and obviously Priceline, and you never seen $800, $900 stocks back in the day. Berkshire Hathaway was always an expensive stock, but there was never this many stocks that were trading, with these $5, $6, $7, $800 price tags on. I think it's kind of like the whole prestige thing. Oh, who can have the highest share price? Google, Priceline, etc., Mastercard.
What
Now,
is the
but they're
highest
gonna
price
split.
stock? Is it Priceline?
Well, it's always Berkshire,
Oh, that's right. That's
BRK.A,
right.
but I mean, it's $170,000
Shoot.
per share stock. So, but of all the guns there, I think, if you're just looking at the guns, obviously there's some other ones too. Remember Washington Post and all those were high price stocks back in the day too, probably because it had Buffett influence in it. But Priceline, PCLN, of your big guns is probably your highest priced one at $1,192. It's actually trading up $3 here. I wonder some of these higher priced stocks that say, oh, maybe they'll split too if they get kind of a sympathy move here with this MasterCard. Speaking of sympathy moves, though, Visa is getting a sympathy move here with it, Joel, this morning. It's trading up $2.50 here, 201.80. It just ticked two, closed at 199.43. So that's spiking up a couple of bucks here with the MasterCard announcement.
Yep, 202.70 high. We've pulled back since making that high to 200.30. So those are some early parameters to keep an eye on. Major resistance you will not find until you get to the all-time high in the issue at 206.49. That pre-market high in the 202s. You had a high on Monday at 202.70. So you do get a little confirmation of the resistance at the pre-market 202.59. That coincides with the 202.70 high.
You know which stock quietly had a pretty good afternoon yesterday?
Facebook.
You know which one of them? Not Facebook. Well, it did too, but look at the chart of BlackBerry, BBRY. It actually had a big reversal day yesterday. It was down all morning, getting weaker again, making new lows, 544. And then look, if you can bring up the chart just from yesterday's action, got that whole V bottom thing happening there where it got down to 544 and just ran, caught anybody shorting it on the dip through 550 and went straight up and got actually over $6 there at one point, I believe. I believe it ticked up, or just under $6 maybe. Oh no, 605. So it did take out and got above 605 yesterday. So it was a hell of a rally for BBRY. Is pulling back here today. Citigroup, it seems like, here they get a nice technical formation. V-bottom coming, but then Citigroup comes out and downgrades the stock here this morning. So it is pulling back here, but I wonder if that was a big reversal day, and I wonder if they might come in scooping up some shares in this again.
And we got no news associated with that, right, Brent?
Just the city assumes coverage at sell, and they set a $4 target. So not so fast, Citigroup says.
Not so fast with this rally. You know what? I might fade this rally here. I don't know. I'm kind of looking at this thing thinking, you got a stop out point now. I mean, down there at 544. That's a ways down on $5 stock, but what do you think on this one, Joel?
Maybe Citigroup, one of their big clients, got stuck short or something yesterday, so they're trying.
We'll help you out there, buddy.
We'll do a little. I mean, why would anybody be covering this stock? I mean, there's really no news. I mean, you got that little rally over the $6 level, got to 605, couldn't close there, so that's going to be resistance. I guess you would get a little bit excited if it did get back over 6, posed a few closes over 6. We do have a 574 pre-market low, so if you can get it at this area and you're risking it, you're risking 30 cents, perhaps get some upside, but we have not had a close over $6 here in this issue since December 4th. You had a 614 close, so to me, I'd kind of would hands off on this one until you get back over the $6 level.
J.C. Penney too had a pretty rally yesterday afternoon. Was trading down, kind of put in a double bottom just above the $8 area. 804 the low on the 6th, and then yesterday 808 the low, or 2 days ago, sorry, 808 the low. And then we popped up yesterday. We had a good lift here, and the stock actually trading up a little bit here in the pre-market again, $8.80.
Yeah, what's going on with that? I mean, it had the pullback, the healthy retracement from 624 to 1030, pulled back beyond the $830 level. That was a 50% retracement. But hey, if you were buying it there, you only took heat down to the point. There was probably some big old bids. I don't know, Dennis. Were you looking there when it was trading around $8? Was there?
I actually did look at it, but there was a ton of action yesterday. I think it was on near the open, or no, this was a couple days ago actually. So I'm getting my days confused again. But I do remember looking at it down $8, thinking maybe the $8 holds, but I never did put a position on. It's one of those that I shoulda and I didn't.
Dazed and Confused. Who wrote that song?
Dazed and Confused.
Yeah. Come on, Joe.
Oh, well, Led Zeppelin, obviously.
Okay, thank you, Joe. I'm just keeping Joe awake there.
By the way, Dennis, I said hey to Julian and Ricky for you last night.
Did he have his drink in his
Sure
hand?
did.
And he doesn't hesitate, eh? That guy. That guy's awesome.
J.C. Penney has hit 885 in the pre-market trading. You got a pretty good setup here. 880 was yesterday's high, sold at 873. So you got to figure if there was size kicking around at that $8 level, might be some size kicking around at the $9 level. So if if you don't get follow through this 880 level, could come back down. 873 was the close. If you're looking, not sure how you people trade that, J.C. Penney for scalping it or trying to go for 10 or 20 cents. Above that 880, 885 pre-market high, I mean, you had the big whoosh down from 1022, $10, 970. So really, there's not a lot of major resistance except at the psychological $9 level.
Couple big guns reporting here this morning. Costco, they reported like 4:30 in the morning, really early this morning. 96 cents versus $1.02, so COST misses earnings. They were leaning the right way on this one. They started the sell-off there about a week and a half ago when it topped out multiple times in the 126 area, kind of cascaded through the rest of the 120s, closing at the low of the day, very near the low of the day yesterday at 120.04. The low was 119.97. So definitely leaning the right way because it's down another $3 here in the pre-market at 117 and a quarter. I was looking at the 115 puts on this thing thinking I could take a flyer there. I think they were trading for about 17 cents or something, but I was like, I don't know if Costco's got enough gas to get down and lose $5 here, but it just lost 3, so that's something to think about with the 115.
Do they have those over yonder?
Costco, of course they have them.
I don't know.
Costco's are all over the place in Canada here. So, oh yeah, I love going to Costco.
Well,
too.
Canada is a much sparser population, so people need to bulk up because there's not a grocery store on every corner like there is here, Joel.
Okay.
Yeah, exactly. So, when you got to go out in there and fight through 10 feet of snow, you might as well go to Costco and bulk up for the entire winter. So we're big Costco fans, especially up there, the Inuits and stuff. They're real big Costco fans up there in Nunavut and stuff.
And get free samples.
But there's none in the tundra, right? They don't have Costco's up, which represents what, 80% of Canada?
No, this reminds me of that episode of The Simpsons when they're lost at sea, but there's a Krusty Burger on an oil rig in the middle of the ocean. There's a Costco up in the tundra somewhere. There might only be one, but there's one up there.
We did get a dip to 114.83. Just I think an odd lot traded there, and then we bounced up to the $118 level. Looking at the daily chart, yeah, they were leaning the right way. Actually, started things off with a triple top there, right at the 126 level. 26.12, 26.12, 25.89. So someone's targeting that whole $126 area. Coming back on the downside here, I really don't see any major support until we come back into the under the 116 area. Actually, you had a double bottom in Costco at 115.18, 115.29. And that low had also a couple other lows in that area back in October. So that's what I'd be looking for in Costco here. If you're trading on the short side, maybe trying to wiggle out of some shares at 115 and change. Coming back on the upside here, well, that yesterday's low is going to be a good resistance point, of course, 120. Ahead of that, after the spike lower, you did get a bounce up to 118.50, so that could be, if you're playing this on the long side, that could perhaps be a target, off the opening bell.
Joy Global also reported earnings here, and they missed $1.11 versus $1.12. The revenue was okay, $1.2 billion versus $1.12 billion, but they are knocking the stock down significantly here in the pre-market. It's down $2.50 right now. Went out at 56.24, is now trading 53.80. That's taking out basically the entire last month's lows. So we're looking here at this chart. It's not looking good this morning.
Initial spike down, took it under $52, took it down to
Whoa.
52.01. Got a pop immediately after that to the mid 54. So we'll keep an eye on that in early trading. Looking at the daily here, this is a chart where you had the high and then they tried to break it. Period of consolidation here, and now we've broken through that consolidation. We'll take a look. You did have a nearly a double bottom under the $53 level, 52.60 and 52.82. So I call 52.72 minor support. Major support at another buck lower than that. Double bottom 51.51 and 51.52. But Dennis, you're looking for any sympathy moves with Joy Global?
I'm not really seeing that much pressure in the sector here. A couple ones that are trading down. I'm just trying to look through my filters here right now. MWV, which is Midwest Vaco, is trading down about 30 cents right now. It's a $35 stock. I'm looking here. Just
MWV. I don't think I've ever heard of that.
This one actually got a downgrade this morning. That's
it got a downgrade.
Yeah, it was BMO downgraded to underperform. So
there you go.
I think that probably would be some kind of sympathy
I don't know
play,
actually
but
if it is or not.
oh really?
So
Okay.
Reaching on that one.
Okay.
I might be reaching on that one too. But I mean, the cat. You can look at the cat here. So cat's trading down. CAT is trading down $86. So you can go to, and I don't know. You may
trading down $86. Oh
it's
my
big
God.
machinery, so I mean that's got to be tied in there too. So Caterpillar's 86.42 closed, just traded 86, so it's down 40 cents. That's probably why Cat's trading down.
Maybe like to see that cat come back down to that $85 level. You had the range really 82.5 to 85 for better part of 2 months here. We broke out from the $85 level on Friday, and now perhaps we'll get a return to there. But this stock, not a stellar performer this year, could be breaking out of a long consolidation period.
And you do have Deere that somebody ticked it down 50 cents here too. So if you think it's going to hit all the big machinery, I'm not sure if they're directly related here or not, but it's machinery, so it is related. So Deere, somebody hit that down 50 cents too, just 300 shares. But Deere, this chart has been absolutely breaking out after a consolidation period for the better part of the entire last half of the year. We topped out multiple times around 85, 86. We finally broke out there 2 trading sessions ago, and we've been straight up ever since. We got as high as 88, 89 yesterday. There is a seller at the point up there at 89. I can see 34,000 shares, but it looks like it might pull back a little bit here today if it's going to have a sympathy move with JOY.
Yeah, those stocks have real quiet in 2013, and now you look at the charts and like they're almost identical. Is that a popular pair trade for the bright traders?
Deer Cat?
Yeah.
Yeah, it always used to be, so definitely, and you're seeing the breakout in CAD similar. So yeah, that's always been a popular pair trade for I think a lot of traders out there. I always look, when you see CAT, usually Deere is doing some type of sympathy move with it too. So definitely the pair traders are all over that one.
Any upgrades, downgrades today of note?
Well, let's look here. We do have 3M getting upgraded at Namura. That is trading up about 60 cents right now here. They put, I think, a 150 price target on this puppy, so that's a pretty big price target there. Obviously, we had the big down day there just 6 sessions ago. We've consolidated and bounced off the 125 area, and now we're starting to show a little bit of life here, and this upgrade is probably going to help.
Nomura, do they carry a big stick in the
middle? And it's not a Goldman, but it's not some no name. I'd say they carry a okay stick. It'll move the price. I'd imagine it can move the price, even 1% or 2. I don't know if it's going to move 2, but probably 1%.
Nomura is more European focused, aren't they? Do you know that, Dennis?
I don't know actually, but I know that I just from experience, because I always trade these things on upgrades and downgrades, and I would rank Nomura in there. It's not one of the big guns like a Citi or a Bank of America or Goldman Sachs, but I always take note when they're doing something. It's not one you can just ignore, that's for sure.
JH3 is popping in here. He exited his key trade.
Did you? He got out there, JH3.
Yeah, and he just want to know, what we think of yesterday's action in the issue. And we've been talking about the $13 level here. And lo and behold, it got up to $13.05 and closed 13 right on the kisser here. So... oh boy, I don't know. It's is it a potential breakout here, or is this 13 level going to hold again?
13.10. That's the number. It needs to get above. That was the top. If we go back to, I'm trying to grab my dates too. I think it was the 11th of November, and then if I also go just to the 25th of November, 13.10, 13.10. Been there twice. I always say third time's a charm. So if we can get up there and take out the 1310 next time, it would be in breakout mode. This is one I like the setup of it all actually now. When you start to look at this much consolidation, if we can start trading 1315, 1320, I think this thing could run another buck or two. Probably a buck. So that's where I would look at possibly getting into this thing if I'm not in it. But below that, you're still resistance is resistance until it's broken.
He's coming up with an excellent question here, and he just, how can I improve my chances of holding long into these possible breakout scenarios? And you know that 90% of trading is 50% mental, Dennis. So
I think it's 80 or 90% mental. I'd even say it's higher than that. Yeah, it's the psychological factors in trading are absolutely enormous, and that's why people will trade on paper, and they'll be like, oh, and they think they're logging it all before they start actually, actively trading. They'll trade on paper, and they'll come in and they'll say, oh, I'm making so much money on paper. I'm going to make all this money in the market too. And everything changes when it's your real money in there, when everything's floating around, obviously, especially when you can start getting to some bigger size. That all influences you. You're looking at the P&L, you're starting to give back gains, it puts pressure on you, and it can make you make bad decisions. So it's all psychological. But the question specifically, how can I improve my chances on holding long into these breakout scenarios? Well, Joel, you might be able to address this too. I know you always like to put targets when you get into a trade.
I like to put targets, but in this kind of thing, I would more, instead of trying to take things out on the upside, I would try and identify a point where, okay, I just don't want to own this thing anymore, and I try to find the support.
Yeah.
And not sure what kind of size you're trading or what your targets are, but I like the formation here at the 1279 to 1282 level. You have three lows within 4 cents. So instead of worrying about what happens at 13 and worrying about the size at 1310, I would say, hey, I'm gonna let this thing take out that 1280 level and close below 1280, and then that way you're not trying to pick. You're not getting too focused on the 1310 number, and you're giving yourself a little bit of leeway, because sometimes and we've talked about this before, sometimes just not trying to pick a top and just identifying an area where, hey, I'm going to sound a little bit of weakness, can keep you in a trade here. And this is a big level. I mean, it's been knocking on the door here for going back to early November. So that's just one key that I like to focus on when trying to hold positions.
And sometimes, if you're really, itching to sell it, you're sitting on a pretty good gain there. Sometimes what we used to do is scale out of the position.
Correct.
You can always sell a little bit there, lock in some profits, and then it makes you feel all of a sudden a lot easier. You only got half your position in there now. Now I can hold the thing a lot better. Like, same thing, and I've had that, and this is an investment, but I struggle with this same concept, H3, in my investment portfolio as well, because I'm holding stuff there longer. I'm not putting more targets and stuff on there. So it's more of a, I like the company, I want to invest in it. I get a company like, MasterCard, and I'm, up a ridiculous amount of money just because I've had it for the last 3 or 4 years and it's been on a run. And I have some bad ones too, don't get me wrong. It's all about, working out of those as well. But once you get up so much money, you think, well, maybe I should sell some and take half of it. And then I'm playing with the house's money all of a sudden too. I always say when the stock doubles, and I think Kramer sometimes says this too, if I'm not mistaken, but when a stock doubles, if you sell half, then you're entirely playing with the house's money. So sometimes that's not a bad idea either. Sometimes, it can still be the wrong move if it really continues to take off. But that's just stuff to think about. And scaling in and out is always a trader's friend as well, especially if the psychological stuff's getting you.
And also, another key to trading key. Keep an eye on some of the other financials in the sector. I mean, that's not that's kind of more of a regional bank. Wouldn't you put it in that?
Yeah,
put
it's
it
a regional, for sure.
in that category. So if you keep an eye on some of the other regionals, I don't want to suggest watching Bank America or something like that, but keep an eye on other things in the sector to get sentiment, because sometimes you get sentiment moves. And also with these banks, and this is just reading just from years of reading Barron's and stuff, and just like last couple weeks, they're talking about all these regionals, and not quite as big as Key, but a lot of these East Coast banks, New England Bank. I can't even remember the names of these things, but being potential takeout targets, and you really have not had a lot of consolidation as of late in the banking sector. So that's another reason to have some optimism, because once companies have a hard time growing from within, sometimes they look out to grow by acquisitions.
If you want some of those sympathy plays, you can probably look at like a U.S. Bancorp USB, which actually broke out 2 days ago. But a lot of these, I've just was scrolling through the charts as you were talking there, Joe. A lot of these other ones have just consolidated a little bit off the highs, like PNC Financial, kind of just hanging out here. It's had a pretty good run, kind of pulled back, almost like a 50% retracement type of thing, and it's just kind of hanging out there. BB&T is another one, which is symbol BBT. That has struggled ridiculously up here at this 30. Look at this BBT chart. This $35 area is almost like the same setup as key. It struggled
Oh,
at a major resistance area, except that it actually broke down yesterday.
right. And what do you think? What do you think our nickname for PNC Bank is, guys? I think this.
Okay.
I think this was made up by Conrad.
Prenatal care.
No.
Punk.
Yeah, there we go. Brent gets
Punk.
the hypothetical free lunch.
Punk. I'll tell you on Punk, $78, if it ever gets up there again, is 60,000 shares sitting up there at that point. So that's a big number for the Punk star, but that's $1.50 away, so I don't think that's going to see that
I
today.
think I also see a double top here in PNC. Yeah, 76.79 to 76.89. Those are the last two highs in the session. So we'll keep an eye on that, and then above that, you get into 77 handle. But Dennis, you pointed out off the hop. I know you were off the air yesterday. Goldman Sachs.
Manu high.
Yeah. What do you think about that? Is this is a precursor of things to come for the rest of the financials? I mean, what does it take? I mean, this is a 15-minute chart to take the thing from under 167 to 172. I mean, what kind of order does someone put out there to make that kind of movement in the stock? You think a big buy stop or something?
Yeah, it could hit some stops too, but I think it's more just the fact that in the first 2 to 3 minutes, and we've talked about this on the show before, first 2, 3, 5 minutes of trading, liquidity is very low out there. Right after the opening print, there's a big opening print. A lot of traders position from that opening print because that's where the specialists on the floor, call them designated market maker now, puts all that size together. But right after that, everybody's kind of sitting back, especially your high frequency market makers. They're sitting right almost sometimes out of the game, or they're really widening the spreads because the adverse selection risk is so high. The risk of being wrong. They want, to trade more stable stocks. Their return on high frequency traders is very, very low. So therefore they can't, put a lot of risk out there. And if there's uncertainty in pricing, they back off their quotes. We know there's not the traditional market makers anymore. You look at the floor, there's nobody there anymore. The human being market makers aren't there anymore. It's all automated market makers and mostly high frequency market makers. So what we have is kind of like a vacuum where there's just not a lot of liquidity in the opening 2 or 3 minutes. And this is kind of, it's always been a little bit that case, but a computer moves the quotes a lot faster than a human does. So, we go back 10 years ago, there'd still be some quotes out there, but they back off and the spreads are wider and stocks can move. Yesterday's move in the financials, you also had the Volcker, they were talking about the Volcker rule.
Okay.
And they were kind of coming out. So there was a little bit of fundamental news breaking at the same time. So it's kind of like a perfect storm. So what you saw here was a huge rally in a lot of the financials as, they were breaking a little bit more news on the Volcker rule. There was a discussion, I think. So Goldman popped $4. Morgan Stanley went, and I was actually short this Morgan Stanley, and I was quick to get out. I shorted 30.50. And then I did not like the pricing action. It went down to 30.40, and literally I'm short 1,500 shares. So it wasn't a huge position, but it was a position where you could get your butt kicked, though. 30.50. It went down to 30.40. I'm looking at a 10-cent spread. Like literally on Morgan Stanley, it's 30.40 to 30.50. I don't want to bid out there because I don't want to make it look like there's something there. So I was like, I'd love to cover this right now because I'm seeing some of the other financials starting to show strength. I'm always looking at the sympathy moves, and then all of a sudden it starts going and nibbling at 30.50. And somebody had like an iceberg order there, and they're nibbling at. I'm like, when that iceberg goes, this thing's gonna pop. So I covered it all. I actually went long a little bit at 30.50. Of course, I sell too soon. I think I sold at 30.65 into that spike. But it went straight up in the next minute to 31. It was absolutely incredible rally for Morgan Stanley, an incredible rally for Goldman Sachs. Yeah, I got long Bank America then right on the opening print too, so I was actually able to make a little bit of money on that one, although it didn't move nearly as much as the Goldman and the Morgan did. But bottom line is, after the first 2 or 3 minutes, you have violent moves because there is less liquidity out there.
Trying to pull up the chart here of Bank America. A little slow here, but we haven't talked about Bank America in a while. The stock is rallying nicely along with the financials, and Dennis, we did hit the $16 on a couple occasions here, going back. When was that? When we hit 16 at the end of November. So you had, must have had a major seller there at the point. And now let's see. I mean, it backed off, really backed off its high. The high of the day was 1568, closed at 1556. A couple things of note here: 3 closes between 1556 and 1558. So if the market stays a little bit strong here, you could perhaps be looking at a lower risk buy. 1551 was yesterday's low, and got a double top at 1567 and 1568.
Yeah, I think if the market goes to rally, and if we can take out that dreaded triple, top that you're talking about there, up to the 1811, I think it'll be the financials that lead the way. So kind of watch the financials; it can give you a tell too. The financials, this could be a key day here because you were talking about the whole 1799, 1800 area having to hold.
Won't go down.
6-7 points higher, we got that 1811 resistance. So you're kind of hanging out in the middle. Look to the financials for a possible tell here. If the financials have a weak day today, maybe we do take out the 1799. But the financials hold on, start to grind their way north here again. Maybe we can potentially take out that top because some of these charts look like they're ready to make a move. Like Citigroup, they were volatile yesterday, they were chopping around yesterday. But if you look and take the whole overall context, November, we had a pretty good November. And basically in December, we've pulled back a bit and we're consolidating here. So a technician will often say this is a healthy pause in, the overall trend, which is still up. Looking at that Bank of America, I think you could say the same thing. That would be violated on the Bank of America if we take out the 1536 low, which we made a double bottom at on the 4th and the 3rd. So that's your number on the Bank of America. If it can get up back over 1575, maybe we make another run for that $16 area where we know there's a seller up there at the point because they had multiple highs, just even looking at the chart of 1597, 1598, 1599. Joel, let's move on to a few other stocks here. We do have a couple other upgrades. It looks like Citigroup's getting busy with some of these telecom stocks here. ALU, they're upgrading. Nokia.
Oh.
No, yeah, one we haven't talked about for a while. Nokia, NOK, Citigroup is upgrading. And here's one. Let's start with this one. Qualcomm, Citigroup is upgrading here this morning as well. QCOM. That stock is trading up 72 cents right now at 74.10, which puts it just under the 52-week high.
That stock did get beat up a few weeks ago. I'm not sure if it was earnings related or not, but has climbed back here. We do have major resistance here at 73.84, or excuse me, 73.97 was the former high of the move. We are trading above that. Let's take a look here in the pre-market. Not a lot of trading here, but we have hit the 74.10, so we do have a potential breakout here in Qualcomm.
What about the ALU NOK charts? What do you think on those? These are always trickier. I hate trading. You know how I always don't like trading the ADRs because the charts are choppy because it's got the overnight action, obviously, that's moving the stock. But regardless, look at this ALU chart here. This has been moving up. This was a $2 stock back here, actually in the dollars back in July. And it's now $4.50. So quietly, this thing has been one of the best performers in the second half of this year. What do you think of this ALU?
I tell you, it's a big move in the pre-market. It's just bumping up at 465, 466. On the daily chart, you're breaking out here above the 459 level. That was 452 was yesterday's high. I mean, I just can't rush out and buy this stock up about 14 cents. Maybe let it come back down to the yesterday's high, 442 or 452, 455. But don't have a real good read on this one. And Nokia NOK.
It's kind of hanging out.
Yeah, boy, that's been hanging out between 775 and 8 for quite a while here. Let's see if the upgrade has done much to
Nothing.
it here. Nothing, huh? I don't know. It's just too much consolidation here to really make a call. If you're trying to buy it on weakness, that 77.70 level is excellent support. And if you want to buy it on a breakout here, you really need to clear 815 to really get into some uncharted waters.
Yeah, it says it upgraded. It's Citigroup upgraded. Okay, it's surprising though it's just not moving the stock there. So, interesting. Let's move on here. Some of that stock's making new all-time highs again yesterday. Twitter made a new all-time high there yesterday, Joel. And it's trading up here again this morning, 52.70 right now. So the stock's off to the races ever since it broke above that whole $42 area resistance. We're straight up $10.
Right, they've come out with some good news about maximizing the advertising, getting revenue in from the advertising, figuring out different ways to make marketers more attractive to Twitter. They signed a licensing deal with Pitney Bowes yesterday that will allow them to, I think it's logical information technology, and basically locate where people are and make the tweets more location oriented. So it's in breakout mode here. Probably if you want to buy it on weakness, let's see if it ever comes back to that old high at the $50 level. I mean, the daily chart almost looks like a monthly in this thing, but yesterday's high 52.58. We are trading above that in the pre-market here. We've made a high above this at 52.86. So really uncharted waters here for Twitter.
This Twitter rally has moved into Facebook as well because Facebook has been taking off the last couple of days. Broke above 50 yesterday. It's getting follow through here this morning. It's up another 32 cents, trading 50.57. Facebook is back.
Yeah, back over the $50 level here. Hasn't been over 50 here since, let's see, it's going back. First close over 50. Yeah. Had that wild ride after earnings, trading up again here in the pre-market. Haven't quite got to yesterday's high, which was 50.77. We've hit a top here in the pre-market here at 50.70.
And then Google made new all-time highs yesterday too. It's been still a continued rally from that 1050 area. Just the steady march higher. Got up to 1092 yesterday, pulled back. Kind of closed week 1084.66. Is trading up another $3 here this morning. Just ticked up to I don't know if you can call it 15 shares. Just traded the odd lots. 1087.70 here. It's trying to make that run for 1100.
1092.31 is the only number you have on the upside. That was yesterday's high. Still $5 away from there, so potential target on the upside. Above that, who knows, 1100 for the issue, but just a steady climb north. And really not a lot of news out of Google as of late, so just a quiet March.
Want your new channelingstocks.com there, stock, Joel? Microsoft, check the chart out.
Mr. Softy sold off yesterday. I know it's.
But look at that. You look at that $38 level and look at the 38.90 yesterday, which is basically the parameters from yesterday's trade. 38.90 the high yesterday, 38.02 here the low, and actually that's been the parameters there. Really from the last week or so, we've kind of, despite that one day that we really shook everybody out when we went through 37.18, if you ignore that blip on the chart, there's been some good support in the 38 area and good resistance up there at that 38.85, 38.90 area.
Yeah, that 38 was that one day that it broke 38. I believe Mullally was on CNBC and people got a little carried away that he's gonna be involved with the company. He's not. That's really it's really died down. Taking a look, must be a major seller up there at the $39 level because we got up there a few times and just have quickly repelled off it. 38.90 high, 38.87 high, 38.88 high. Then a high of the recent boom has been 38.98, but looks like it's just trying to creep its way back up. Maybe if you want to catch this thing at the settlement, 38.11, 38.12. Perhaps a lower risk with basing it on that 38.02 low and that 37.99 low that you had on Friday.
General Motors put in a double top there quietly yesterday after all the news that we had on it. Got up 2 days ago up to 41.16 and topped out yesterday at 41.13. What do you think of these technicals now with a potential double top in place?
It's at the $41 level too, so an institution perhaps lurking around there, 41.13, 41.17. I guess you got to figure some size may come down to the $41 level ahead of that. So short term, if you're holding on to this thing, you got to, you'd like to see it bust above 41 and get a close above that area. It did close right on its low tick, which is kind of it was
concerning sometimes.
Yeah, big selling balance or.
I didn't notice, but sometimes when you see the stocks close right on their low ticks, that is the case. I did not notice that there was a selling balance on it yesterday, though.
Right, 40.31 was the low from Monday's trading as well, so keep an eye on that. And I know when we were talking about it just as the news broke, I know it did get a pop down in the pre-market to 40.15, so still holding in there, holding in that support area, 40.30. If looking at it for the hold there and bounce back up to the $41 level.
Now we got our guest coming up here soon. Do we want to hop into the headlines with Joe here before the guest comes on? Joe?
Well, I guess we can do that, no problem. Today's headlines around the globe. Cisco is facing investor pressure to dump set-top box unit. A report from Reuters says that Cisco Systems CEO John Chambers is facing growing pressure from investors to exit its television set-top box business. Where revenue has been plummeting and profit margins trail the rest of the company. However, there are a few obvious buyers for the unit. The former Scientific Atlanta that Cisco paid $6.9 billion for in 2005, so he may have no choice but to close the business, analysts say. AT&T CEO says smartphone subsidies must cease. Apple Insider saying that AT&T CEO Randall Stephenson said wireless carriers should aim toward an ecosystem without subsidies for smartphones, a route which T-Mobile is already committed to, as shown by a no-money-down offer for an Apple iPhone for the holidays. Apple Insider was citing comments from Stevenson. Citigroup again is looking to sell OneMain Financial. Citigroup looks poised to make another run at selling OneMain, the U.S. consumer lending unit, as reported by the American Banker. The unit, which makes personal loans of up to $15,000 for debt consolidation, home improvements, and other purposes, first went on the block in 2009 as part of Citi's strategy to sell units that were not part of its core business. Boeing 777 site pursuit joined by California. California's Office of Business and Economic Development announced that it plans to submit a bid to try to lure Boeing to build the next generation 777X in their state, joining more than a dozen states expected to submit proposals, as reported by the Los Angeles Times. Alibaba to extend $8 billion loan to buy more time for an IPO. Alibaba wants to extend the drawdown period of an $8 billion loan from January 2014, a move sources say would buy it more time to launch an IPO, as reported by Reuters. The original expiring date of the drawdown period on the loan was January 30th of 2014, and Alibaba wants to extend that to December 31st, 2014. Microsoft may pursue Nokia brand Android phone. All Things Digital says Nokia's mobile phone unit was working for some time on a project dubbed Normandy to use the open source version of Google's Android in an improved low-end smartphone, and within Nokia there is a sense that Microsoft may still be willing to pursue the project, All Things D citing sources close to the matter. The NSA is using Google cookies to identify targets for hacking. The National Security Agency is secretly piggybacking on the tools that enable internet advertisers to track consumers using cookies and location data to pinpoint targets for government hacking and to bolster surveillance, the Washington Post reports. The intelligence agencies have found particular use for part of Google's specific tracking mechanism known as the PREF cookie. And the Wall Street Journal says that video game firms are seeking to stop study of links to violence. Legislative proposals to study whether video games are linked to real-life violence or mental health, prompted by a rash of mass shootings, have stalled amid a campaign by the industry, specifically Microsoft, Sony, and Nintendo, to quash the efforts, according to lobbying records and lawmakers. The Volcker Rule restricts how banks can trade securities. Broad new government rule, the so-called Volcker Rule, approved by 5 financial regulatory agencies to limit risk-taking by Wall Street, will force banks to rethink virtually every aspect of their trading activities, setting the stage for more tumult as the largest U.S. at the largest financial institutions. That's reported by the Wall Street Journal. Time Incorporated employees could face a new round of layoffs in 2014. Norm Pearlstein, Time Incorporated's new chief content officer, said at a quarterly management meeting that layoffs are painful but necessary, suggesting that employees could be facing another round of layoffs in 2014, the New York Post reports, citing sources close to the matter. It is unclear how deep the cuts would be, but in early 2013, Time Incorporated laid off about 500 employees. Mark Zuckerberg, his vision apparently conflicts with the user's view. Facebook CEO wants the website to feature high-quality stories and photos, but many users see the website more as a place to share personal items and funny stories and pictures, according to All Things D. The disparity is starting to show, with Facebook users rejecting a design overhaul launched by the company earlier this year, and the company currently adjusting its algorithm in a way that will push some of its more popular content down. All Things D stated. In other Facebook news, Facebook is aiming to make social chats visible to brands. CNET reporting that Facebook is looking to give brands and media companies that produce entertainment content a way to view conversations and feedback involving their product in order to promote their brand. CNET was citing a Facebook executive who was not named. Buying Charter could make sense for the Time Warner Cable. New York Times says that Time Warner Cable, which Charter is currently looking to buy, could benefit by looking to acquire Charter instead. Ooh, another reverse acquisition here, Brent. Mark that down for another one.
Yeah, the old Josie Banks Men's
Warehouse
trick.
Porsche and Volkswagen, Sears and Kmart, so on and so forth. If Time Warner buys Charter, the combined entity would have less debt and retain the biggest benefits from the deal, the New York Times stated. And yesterday's approved budget deal, set for January to avoid another government shutdown, could raise airline fees and Pentagon spending. Head budget negotiators Congressman Paul Ryan and Senator Patty Murray presented a 2-year budget agreement last night, according to Politico. Under the deal, fees for airplane passengers will increase, while Pentagon's spending will rise by tens of billions of dollars, the website noted. The agreement must still be passed by both houses of Congress and signed by President Obama, who said he supports the deal. AU Optronics reports November large panel shipments of 10.5 million. AU Optronics shipped 10.5 million 10-inch and above TFT LCD panels in November, a 12.7% sequential increase, reported by Digitimes. The company also said it shipped 13.74 million below 10-inch panels in November, a decrease of 6.3% sequentially. CBS CEO Les Moonves hinted that Amazon spent $700,000 per episode of Under the Dome, which the online retailer streamed 4 days after CBS's flagship broadcast network aired the shows, according to CNET, citing comments from the CEO. The article notes that 13 episodes of the summer sci-fi series comprise the first season that totals 9.1 million. And lastly, for editorial news here, Foxconn technology startup Fund Eyes I think they meant to say funds, eyes, wearables. Bloomberg reporting that Foxconn, maker of iPhones and Apple iPhones and iPads, is launching an investment fund to finance startups developing new kinds of wearable computers, sources say. Syntrend Creative Park Company, a Foxconn unit, will administer the $6.8 million fund and select participants for a trial in the first quarter. And in some silly news around the web, well, I guess it's not really silly, but the Huffington Post reported that a Chinese man reportedly committed suicide in a crowded mall over the weekend after arguing with his girlfriend about her shopping. According to Chinese media reports, the man jumped to his death Saturday at the Golden Eagle shopping complex in the city of Zuzhou. After an afternoon of shopping with his girlfriend, it is believed the man was about 40 years old. Quoting witnesses of the tragedy, the man had been arguing with his girlfriend before he climbed over a 7th-floor railing and leapt to his death. The couple's fight may have started when the man expressed concern over his girlfriend's expensive purchases. And on this,
He could have just asked her to return some of the purchases.
I don't know. It seemed like if jumping off the 7th floor was his option, she might not have gone for it.
Joe with the Chipper News today.
That's right. So today in history, we've got some really great history tidbits.
Okay, let's go.
All right. On this day in 1934, Bill Wilson, the co-founder of Alcoholics Anonymous, took his last drink and entered treatment for the last time. That's right. In 1968, the Rolling Stones Rock and Roll Circus, featuring the Rolling Stones, Jethro Tull, The Who, Taj Mahal, Marianne Faithfull, The Dirty Mac, and Yoko Ono, was filmed at Intertel VTR Services Studio in Wembley. In 1972, Apollo 17 becomes the 6th and last Apollo mission to land on the moon. Joel, you probably remember that.
I think did we get to watch it in school? I can't remember.
Yep. I got 2 more here. In 1978, the Lufthansa heist is committed by a group led by the Lucchese family associate Jimmy Burke. It's the largest cash robbery ever committed on American soil at that time. And last but not least,
is that like Ocean's 11 or something?
Goodfellas.
Goodfellas. Yeah.
And last but not least, in 2008, Bernard Madoff was arrested on this day and charged with securities fraud in a $50 billion Ponzi scheme.
What a popular day we have today.
I know. That wraps it up for today's editorial headlines. And just remember, everybody, that just because you listen to the Pre-Market Options House show, Options House will give you 150 commission-free trades if you sign up for an account. So just click one of those buttons at the top or at the bottom right. Options House, 150 commission-free trades, all for you just because you listen to Benzinga's pre-market info.
That's really a lot of trades.
You know, it really is. I mean,
I was thinking about that yesterday.
How long do you think that would last you, Brent?
I mean, I'm not much of an active trader, so I mean, like a couple years.
Yeah, I was thinking. I was even being generous, thinking that it could be a year for me, and I trade probably even less than you do.
Maybe it would prompt someone to become an active trader.
Ooh,
I
there
never
you go.
even thought
So
about that.
if any of you out there are interested in getting into trading, in addition to listening to the show, 150 free trades. It's so simple, right?
Yes.
Everyone will buy free. Everyone will pay for free.
That's right. What were those caveman commercials? Like any idiot could sign up for the account, and then the cavemen get all offended.
Yeah. He should have been offended, though, I think.
Yeah, well, all right. Well, with that, we're going to take it to a break right now before we bring on our special guest, Ed Cahill at Lux Research. So everyone stick around. We'll be right back.
Welcome back, traders and investors. We have a real special guest on today. We have Ed Cahill from Lux Research that covers the solar sector. Ed, how you doing today?
Doing well. How are you?
I'm doing good. I was just teasing you a little bit because I was looking at your picture at Skype here, and you remind me of all these young bucks we have here at Benzinga. Just give us a little bit of your background and on the markets and your current occupation and what you're doing here on the pre-market info show.
Sure. So let's see. I graduated from Middlebury College with a degree in physics, and since then been working with various clean tech companies. Worked with Enernoc, which is a smart grid demand response company, and Fraunhofer doing PV module research and development. And then decided to go into the market and business side of things, and went with Lux Research, which is a technology scouting and market analysis firm and focusing on solar.
Okay, so the solar sector is definitely one that gets a lot of ink in the markets. Very volatile stocks with high PEs. A lot of analysts that take a negative approach toward the issues, but you seem to take the other side of the coin.
Yeah, so my perspective is from the technology side of things. I don't really follow the stocks. They are pretty volatile, and for good reason, because the industry is pretty volatile. It's kind of in its adolescent phase in its development. So like any teenager, there's lots of ups and downs.
Okay, so I guess one of the primary arguments that the bears are using it. These solar firms are highly subsidized, and some of these subsidies are scheduled to go away. How is the solar sector going to compete with when these subsidies go away with other cheaper energy sources?
Yeah, that's always the biggest question. The whole point of subsidies is to, I guess, encourage growth in the market so that the technology itself can compete on an unsubsidized basis moving forward. So, I mean, taking away all the other arguments that fossil fuels are also subsidized, et cetera. The two key ways that solar is going to be able to compete without subsidies is to reduce its costs and to solve the problem with intermittency. And when I say intermittency, I mean on the electric grid, at any one point, the amount of energy going onto the grid needs to be getting used by the end users. And when when the sun is shining or not shining, you can't really control that. So that causes some intermittency on the grid, which makes it harder for utilities to balance that load. So those are the two problems with solar. So how it's going to compete moving forward, reducing the cost. The best way to reduce the costs is actually to increase the efficiency of the technology, because you just need a vast amount of area to collect enough sunlight to turn into enough energy. So by increasing the efficiency, you reduce the amount of area of all that material that you need for the same amount of watts coming out. In terms of the intermittency, there are a lot of energy storage technologies coming out, but it's even more nascent than the solar industry. So there are other strategies. So solar thermal, for example, is a different technology that can integrate with natural gas power plants that can help react to changes in sunlight.
Okay, so we're just going back to the subsidies here. What is the current status of the subsidies, and how are they going to be phased out?
Are you talking in the U.S.?
Yeah, well, we have federal, we have state, we have local. Let's start with the federal, because that's probably where the primary subsidies are coming from, correct?
Yeah, so the biggest subsidy is the federal investment tax credit, and that's a 30% subsidy, and it's lasting through 2016. So in 2017, it reduces to 10%. So that's a 10% of the upfront project costs. So that's a big jump, and so companies have the 3 or 4 years to get those costs down to start qualifying for projects at a competitive level. At the state level, there's mostly solar is driven by renewable portfolio standards. So the government requires utilities to satisfy demand with a certain percentage of renewable energy. So, for example, California aims their targets 33% renewables by 2020, and that's already at 20%. So it's got 13% more to go, and 2020 is that deadline. So whether or not they increase it after 2020, some say they are. And then, of course, every state has a different renewable portfolio standard. There are also state renewable energy credits that give a little bit extra money for solar energy production in states like New Jersey and Massachusetts, Maryland, for example.
Okay, so as these subsidies go away, and the key for the solar companies is to make the energy cheaper to produce. So what new technologies are out there that are going to enable these companies to have lower production costs?
So the incumbent solar technology right now is crystalline silicon photovoltaics, and that's the market leader. That's 80 to 90% of the capacity and production out there is this technology, and it's fallen in price by 50% over the past 3 years. And a lot of that has to do with scale of the all the different steps in the manufacturing that has decreased the costs. But moving forward, really some new technologies need to take that efficiency that I was talking about up to the next level. So adding passivation layers to the solar cells, fine tuning the electrical contacts using replacing the expensive silver with things like copper, for example. And then also the next step beyond that is to even start growing the wafers from the bottom up instead of getting big ingots and slicing them, because that reduces the waste in the process, and that's called kerfless wafering. There are also other technologies like thin films, for example. So First Solar, for example, uses cadmium telluride thin film, and right now it's the cost-leading technology. It takes less energy to manufacture. It's better in really hot conditions, making it good for utility scale desert conditions. So those are those large projects in the desert that you see. And First Solar has it's putting a lot of money into its R&D to increase those efficiencies, and it's being pretty successful at doing so.
Okay, another argument of the bears for the bears is site suitability. You have cloudy areas with frequent rain. How is the industry dealing with that?
Yeah, I mean, solar is not going to be the only source of energy anytime in the future. It just doesn't make sense in some conditions. Russia, which has a lot of natural gas and not very much sunlight, is not going to move into a ton of solar electricity. That being said, the energy diversification is a very interesting issue because solar can hedge some volatile gas prices, for example, or anything like that. So utilities are always looking to kind of diversify their energy portfolio, and solar has a nice feature where the utilities sign contracts with the owners of the power plants for a steady dollar per kilowatt hour for 20 to 25 years. That doesn't change, so there is no volatility in that pricing. So that's one advantage of solar.
Okay, so you're coming up with a 2025 projection for solar kind of to be hitting its stride, with natural gas or using natural gas or being more independent. How did you come up with that 2025 projection?
Yeah, so that's looking at pretty much the whole globe when solar will be competitive with natural gas, and that's taking into account all the different geographical, characteristics of each region in terms of how much gas they have, for example, and historical gas prices. And it's also taking into account 3 different gas price scenarios. So there's a low, medium, and high gas price scenario, mostly tapered around what happens with hydraulic fracturing for natural gas. So in the U.S., fracking is the abbreviated term for it, has made gas prices plummet, really. But there's also a ton of resources in places like China, Argentina, Brazil, Australia. And so that can happen in other regions and can also be exported. That will help, bring those prices down on a global scale. So using, basically the high gas price scenario where only a couple of those countries actually start moving into fracking, and then the low gas price scenario where all of them do. Using those to see the likely case in 2025, that's when all of the regions solar gets within 2 cents per kilowatt hour of natural gas. And this, of course, means that some regions will actually be sooner than 2025, and some will be closer to 2025. But that's the most amount of time it'll take for solar to be competitive.
Okay, when doing some of the research for this interview, I saw that some panels require 11 years worth of energy production to begin making new energy. Is that a correct statement?
Yeah, I think the research that you're talking about is coming out of like Stanford and NREL have done similar type of analyses, and that is accurate. And I think one of the caveats in that was when they did that study, 40% of the solar panels installed in the world were in Germany. Now, Germany has the same amount of sunlight as Alaska over an entire year. So, it's not the best place to put solar, but it's heavily subsidized. So, yeah, maybe in a place like Germany, it takes 11 years to do that. But say the same panel in California can easily double that production and cut that time to net energy positive in half.
Okay, that's a good explanation for that. And another case for the bulls is being able to handle production and demand. Panels produce a lot of energy during the day. How's it stored and saved to be used at night? And then also you produce most of your sunlight and your energy during the summer, and it's probably most needed during the winter.
Yeah, and so solar right now accounts for a fraction of a percent of the global energy production out there. So at that level, you don't really have to worry about storage because there's plenty of other sources that can produce electricity at night, all those fossil fuel sources, for example. So this only becomes an issue when you get to 20%, 30% levels when you actually need this storage, or you need very fast reacting power plants to help compensate for that, basically to help react to load. So when you get to those points, the cheapest way to do it is actually just to use natural gas. So, in the US, for example, with natural gas being so cheap, it's actually can benefit solar installations because it can raise that limit from 20% to maybe 25% by being able to react to different amounts of sunlight, and during the summer, during the winter, during night, during the day.
And solar production, in order for that to be increased, you need the materials to make solar panels. And some of that material, if I'm not mistaken, is in short supply. Short supply drives up the cost of these materials. How is the solar industry, dealing with with that the production goods?
Well, the incumbent technology that I was talking about, crystalline silicon, that accounts for about 80% of panels being produced, is made from silicon, which is actually the most abundant resource on the planet. It does take a lot of energy to produce that, so that's why thin films use less energy. And now thin films like cadmium telluride uses tellurium, which is a little bit more rare, as well as a little bit of indium, which is expensive. And both technologies use silver, which of course can get very expensive. So there are technologies that are looking to replace the silver with copper, for example. And then, of course, in terms of cadmium telluride technology, First Solar is really the only one mass producing that technology, and they've secured more than enough tellurium to last their expansion plans.
Okay, so let's get down to the nitty gritty here, because we got people in our listeners in the Options House chat room here, maybe trading solar stocks or holding solar stocks in their portfolio. Do a lot of research in the industry. Do you happen to follow any of the solar stocks?
No, again, I'm a technology scout, technology analyst, so I don't really do the stocks, but can give you trends in the technology if that's what you're interested
So
in.
you're not putting any money into any solar stocks.
No, I'm not.
Okay. All right. So if you can't tell us what to buy, can you maybe tell people what to avoid as far as stocks in the solar industry?
Well, as the industry evolves, companies are really doubling down on that technology improvement that I was telling you about. And so, the companies that are, sticking with their just mass manufacturing with undifferentiated crystalline silicon technologies, especially companies in China, the federal government in China is looking to cut out some of that repetitive capacity. So they are stopping some of that funding that's been allowed that growth in the first place, and those Chinese manufacturers that don't invest in that new technology will, basically hit the chopping block. So, people like Trina and Yingli, or companies like Trina and Yingli, are investing in high efficiency technologies. But, maybe some of the other tier 2 and 3 Chinese companies will definitely start falling by the wayside.
Okay, and just to finish up, I know you do your research into into solar energy and also alternative energy. If folks aren't looking to to invest in this sector and they want to stay away from the solar stock, what are some of the other alternative forms of energy you think that will be evolving, and maybe companies that produce that, would they be something that perhaps they could be on investors' radar?
I think the companies that are able to provide an entire energy solution are going to be the ones most successful moving forward. So, and when I mean entire energy solution, I mean incorporating a number of different sources that can react to what's happening in the market. So, having a little bit of natural gas technology. So, there are technologies like microturbines that can be used for distributed energy, for example, that can also combine with things like solar and wind, and energy storage for that matter. And then also incorporating that with energy management systems that can help balance everything there. So these types of systems have a lot of flexibility and can really react to what's happening in the market. And those are probably the most attractive technologies and companies that are doing that out there.
Okay, JH3 is coming up with a pretty good question here, and it has a little bit of a political undertone to it, but figured I would throw that out there for you. And he's talking about the power structure of big oil, and we surely know what an influence that has in Washington. And his question is will the power structure of big oil ever allow for alternative energy sources to flourish? And he perhaps they're a bit doomed until we use up all our oil, which is not going to be for a long time, or unwind big oil.
Yeah, well, you'd be surprised how much big oil is actually looking into things like solar. Most of the big 5 energy companies out there have stated that they're planning for governments to start imposing carbon taxes, and they're planning for that future just to hedge that risk in case it actually does happen. And how they're doing that, it's with renewable energies, with energy efficiency technologies, and moving towards lower impact energy sources like natural gas, for example.
Okay, all right. Well, you definitely have given us an outlook on the solar sector, delved into some of the mechanics of it. We will be following your prediction as far as the ability of solar to not replace the other forms of energy, but perhaps become a bigger part of it. I think that's what your thesis is, and we will keep an eye on some of these solar stocks and see what news evolves, because they are trading at ridiculous valuations. And Ed, we really appreciate your thoughtful research and having you on today, and we certainly like to have you back on as a guest.
Thanks, I appreciate it.
Okay, have a good day.
You too.
All right, it's 9:20 here, and we have yet to hear from Shaky Jake with some morning movers. Jake, what's on the radar?
What's going on, guys? Yeah, I figure I'll get you guys some movers. Something I want to go over real quick before we kind of dive into just hammering out some of the stocks that are moving out there is a big report this morning out from Jefferies initiating the entire 3D printing sector. So they initiated, it's titled Prototyping Today, Mass Manufacturing Tomorrow. They issued a buy rating and a $102 price target on 3D systems, a buy rating and a $72 price target on the X1, that's X-Ray, Oscar, November, Echo, a buy rating and a $155 price target on Stratasys, Sandy, Sandy, Yankee, Sandy, and finally a hold rating and $40 price target on VoxelJet, that's Victor, Juliet, Echo, Tango. VoxelJet is also actually under attack. I think it's from Citron Research, is who's saying that one's a scam. That they're providing financing to buy or to sell their 3D printers. I can't remember exactly what they said was the scam there or whatever. But it looks like one of those short research shops, either Citron or Muddy Waters, or one of those is going after them. So, anyways, I want you guys to keep an eye out on the 3D printing sector. Deutsche Bank initiated 3D systems yesterday morning. Then we had this initiation after the close yesterday. So we had some strength in 3D systems on the session yesterday. This could easily cause a follow through. It's a very bullish report, very, very thorough, 97 pages long.
97. Holy mackerel! So they're not worried about the current valuations that these stocks are trading at.
I think they're. You know what? I didn't dive in too deep because, as I said, there's 97 pages there. I'm gonna do more in-depth analysis in a little bit. Gonna put out an article on Benzinga.com about it, and these most recent initiations and ratings. But they're really focusing on the fact that this is the technology, at least the manufacturing technology of the future, and that you need to get long on these names. It's very bullish except for VJet, and I think that they're just worried about VJet on the kind of controversy going on around it right now. Whether or not it's manufactured or not. I think they just kind of want to stay away from that. They also rated a private company. I can't remember what the name was, but they also rated it as a buy, even though I don't know how you buy shares of a private company. I guess you own the secondary market. But
what about did they mention Hewlett Packard at all?
They did, actually. They have a section in the report dedicated to Hewlett Packard. It's about a page and a half long. So I'm going to dive into that. They also mentioned one other company. I can't remember who it was. But yeah, they absolutely did. I think it's interesting because 3D printing is more manufacturing than actually printing. I think printing is just the way to kind of think about it. So I'm not sure Hewlett Packard's really the company to do that. But at the same time, Hewlett Packard is a massive tech company. Wouldn't be shocked if they decide to get more into hardware stuff like that. You even have, what was it? Is it Office Depot or is it Office Max? One of those two was the ones that are actually carrying the 3D printers in their store now, where you can go in and print something off in the store. I don't know if that's started yet or not, but I remember catching a press release about that about 8 months ago. So that was pretty cool.
So has the street been? Is this the first firm? Is Jefferies the first major firm to warm up to 3D printers? They have been getting some coverage. Is this kind of really a watershed event here in the 3D printing industry?
I think as far as how big of a tome this was. I can't even call this a report. It's more of a book.
The tone of the
tome, like a book, like a huge book. This thing it's gigantic. So they really did a ton of research on this. They have engineering diagrams in it and everything and they talk about the different technologies, whether it's extrusion printing, whether it's there's a few different ways of doing it. They talk about how the nozzles work, how the different printers work, who's exposed to what. It's kind of cool. But you also had that Deutsche Bank initiation on early Tuesday morning. So, they're not the only big firm out there. Deutsche Bank, being one of the biggest names out there with the initiation on 3D systems, there's quite a few big names out on these 3D printing names. So I think, it's a momentum sector. It's been doing really well, and I think they want to, throw their hat in the ring.
And you mentioned that the 3D printing, that it's not so much printing up your kid's school project, but it's the way it's going to be used in the manufacturing sector, correct?
Yes.
So what let's take the flip side of things here, Jake, and what companies could possibly what manufacturing companies could possibly be hurt by this rise in 3D? A little bit of a little bit of a pair trade here. Go long to 3D printers and short what stocks, Jake?
Well, I guess you got to think about what companies own or create large and heavy machinery, or create assembly lines and things like that. I don't have any names off the top of my head, to be quite honest, and I'm gonna have to dive into that. But I mean, I'm thinking about companies that could even be like helped by this. Something like maybe like Delphi or something like that, because the auto parts suppliers, right? They spend 8 months designing a part for GM, and if GM decides, well, we can't have that, we don't need that part anymore, they get hurt pretty badly. Whereas in this case, it's so easy for them to build it. They don't need to go down to their plant in Mexico. They can just have a couple 3D printers sitting in a lab, put out a couple of prototypes.
Yep.
Which, I mean, I remember I actually one of my old roommates was an engineer at Delphi, and that's exactly what they do. They just print off prototypes on these 3D printers. Like, these are the really advanced ones that they use. But I mean, yeah, they're just printing off the prototypes after going into AutoCAD. They add a few moving parts to them and then see if it works. If it works, and they send it down to main manufacturing. So
it can be used for like manufacturing, eventually be used for is it just for experimental purposes, or could it actually be used for manufacturing in let's say the car industry?
Well, right now it's for prototyping primarily, but you can print in anything from metals to plastics. And I've even seen ones where they take literally like a bin of chemicals and they use a laser, and when the laser touches the chemical, it instantly hardens into a tough solid. And so what they do is they slowly extrude it from this like pan of chemicals, and it's obviously laser precise because they're using a literal laser to extrude it. It's pretty cool. And that's the whole focus of that Jeffries report, is that this could easily become the next phase of manufacturing, small batch manufacturing by small local shops rather than these large manufacturers creating these things. So
Wow, some good in-depth information there. Do we what else? Do we have any other movers today? We got a few minutes here for the market home.
You got to look at MasterCard and Visa. I mean, you had that huge news on MasterCard after close yesterday. Mike Alpha. I know we had a little bit of a bump up close to $800 in the post market yesterday. Joel, I'm not sure exactly where it is right now. Last time I looked, it was up about 4%, but it hadn't managed to get back above that $800 level. What do you think of MasterCard?
I mean, I definitely can't recommend, shorting into this momentum here, even though I usually do. It did hit the $800 level right on the nose. Since then, someone's been targeting the 796 level. Now, this is a pretty defined chart here in the pre-market, for an $800 stock here. Obviously, someone's taking a piece off here at 796. So we are trading a few bucks from that. I would use that as a potential resistance point or potential target on the long side. Coming back on the downside here, 790. It hasn't printed below 790 here. Really got the initial spike off that news. So if you just kind of want to let things run here, you don't want to sell into the strength. I don't think I'd want to be long this issue if he takes out 790.
Another one I want to take a look at is Groupon this morning. Gulf Romeo Papa November had a nice rally yesterday, gaining over 4.3% from what I'm seeing. We do have an upgrade from Wells Fargo this morning to an outperform rating. Shares are up about 3.8% the last time I looked. I'm not exactly sure where they are right now. I'm not looking at a chart. But Groupon has been rallying throughout the morning. I mean, kind of seeming a little bit of follow through there. Joel, what do you think about Groupon? Back above that $10 level.
Well, first of all, I want to point out that you see this spike down in the chart here when we got under 850. You know what the driver was on that?
We can take a look.
I know what it is.
Yeah?
I want to know what it is. It was a Goldman Sachs downgrade.
Wow, that's huge.
Yep.
Yeah, that'll do it.
Yep, and drove it down. All the people that have been leaning on the $9 level took that out, and remember talking about it here, and I said, hey, maybe it can climb back above 9, and that's what it did. It gapped up the next day and then just hugged the $9 level. That's the major support, but we're $1.40 away from there, so that's not going to do you any good. What you're going to be looking at, you are now going to be filling the gap here. You had a gap going back to the 18th 18th and 19th of November between 1036 and 1085. So you're getting a hole into that gap area. I think we might struggle here a little bit at 1050. This is, it's a pretty big move from the stock. It's moved up $2 from the low. So looking for the pre-market high. Pre-market high is confirming this analysis too. Is the high is 1050.
So there was some action in SNI this morning. It was Scripps Networks there. After the close yesterday, Variety is reporting that Discovery, that's Delta India Sandy Charlie Alpha, may bid for the Scripps Network Interactive. This morning we had a Citigroup downgrade on the company to a sell rating. That came out at 844 this morning. Coming through at about 9:24, just a couple of minutes ago, we had an update that says Scripps Interactive shares are pulling back. We hit a high of 87.75.
Wow.
We got this huge pullback. There's a report that they are not in discussions with Discovery. David Faber reported, David here from CNBC reported that they're not in talks with Discovery, and at least on the banker level, and so that caused shares to immediately pull back. And we had that huge rally from below the $76 level, around $75 after the close yesterday, rallying as high as $87.75 this morning. I'm now seeing it below $80. Joel, what do you think of this one?
Well, if you use that initial news to get rid of your shares, congratulations, as the news didn't come to fruition here. Just looking at this issue trading big, still some believers here as this thing is gapped up here. So the story may develop later. I know David Faber has broken the news, but 79 is hold up so far here in the session. 79.10 opened at 79.50. I guess if you want to play this, use that early morning low at 79.10 as a potential exit point, because below 79.10 you got a long ways to go down to 75.38. And interestingly, this stock had a real bad day going back November 7th of this year. Had a 79.79 high. We just made a 79.80 high here, so we do have a resistance point just under the $80 level.
Another one I want to take a look at is Costco. They did report earnings this morning. Let me grab that number for you. The EPS came in at 96 cents versus expected $1.04. Revenues came in at $24.47 billion versus expected $25.47 billion. So we got a miss on both the top and bottom line there for Costco. That ticker there is Charlie Oscar Sandy Tango for anyone following along there. Do see a little bit of weakness. We got a downgrade from UPS from buy to a neutral rating this morning. Or I guess that was actually a while back, but that's the last major rating we have on it. So we've had a major bank kind of going against it from buy to neutral there. No real guidance yet. Waiting for that conference call to get fired up. Any thoughts on Costco here, Joel?
The spike really got things going on the downside here. We spiked it down to 114.83, but we've quickly returned to this 118.50 level here, and I'm just keeping an eye on this. 118.50 has been holding up in the pre-market here basically since 7:15 this morning. We did hit 118.49 here initially, so I'm keeping there's someone there with a piece, with an opinion, letting stock go at 118.50. So we'll see if they can get rid of that seller at 118.50. We could make a nice, run up back. You got a ways to go to fill the gap, though. In order to fill the gap from yesterday's trading, you need to get all the way back up to the 120 level. So just keep an eye on the action here at 118.50 in shares of Costco. And I like Costco. Do you ever go and get those? They have those on the weekends. They have the seafood thing. You go get these huge lobster tails.
Wow!
You never go there?
I used to cruise around on weekends there, but not for lobster tails, but for the free samples.
Oh yeah. You got to be careful. Some of these people get really aggressive on the free samples.
Oh yeah, they do.
You got
to be a pro.
You got to be pro, just like in the grocery stores. All right, Jake. Well, there's news there waiting on your desk to get out to the Benzinga crowd, so we'll let you get back to that, and I'll just hop on with Brent here, and we'll go through the open, try and cover some of these stocks.
Sounds good, man. We do have a question on Core Mining. Charlie Delta Echo is up almost 6% yesterday. That's a question from the chat before I sign off. I just want you to hop in on that one,
Okay.
see what you think of that. We just got a question asking, how does that chart look to you?
CDE, huh? Well, you did have a nice move in gold yesterday, right? So this is a mining stock running into a little bit of resistance. You did hit 1119 yesterday. Well, 1119 is the high, but 1133 is yesterday's high. You also had some other highs in that area. If you go back to earlier in November, 1132, 1133. So I'll say that's resistance here. You have gold basically trading unchanged here. So really to get had a nice move up yesterday, but now to make another leg up, you really got to get through this 1133 area, and that might take you back up. Let's see, you had another high. Really nothing up till you get to 1168. 62 and 68s were another double top that you had in mid-November. Moving on to the S&P futures here. The dreaded triple top is still in place here. We are trading right at yesterday's low. Yesterday's low, 1801. That is being defended so far here in today's session. Pre-market low, 1799. So just right now, just holding in here. Looking at a few of the issues that we covered. Let's see what's going on with this MasterCard here. The only number we had on the upside was the pre-market high of $800, making a $798 high here, trading up a smart $34, carrying the market here. So traded at 800 before, maybe a potential target on the long side as well. There was a seller at 796, a pretty good seller. He held up there for quite a while. Was taken out, so we'll see how things compare at the end of the day with that 796 level.
Visa definitely trading up with MasterCard. A couple of the other processors, Discover Financial, Capital One, and right now I'm looking at American Express, AXP, not moving up quite as much. MasterCard and Visa historically trade pretty close together, and these other couples, American Express, Discover, not quite known for trading as in line with either MasterCard or Visa.
Yeah, Visa getting a little bit of a sympathy move here. We've made a 202.54 high so far in the session. Monday's high 202.70. So the specific news related to the MasterCard giving Visa a boost, but not charging ahead as much as you think it would. Taking a look at some other issues that we covered in the show today. We talked about Groupon here, and Groupon trying to continue. Believe it got an upgrade today. Had a nice run. Did get to 1062 in today's session. So we did take out yesterday's high. We did fall back a little bit here. So we'll keep an eye on shares of Groupon here. Yesterday's high, we sprinted above yesterday's high. 1062 was a high that you had in the session, now falling back a bit. Pretty big gap in Groupon between 1018 and 1039. So you're playing this long off the hop here below 1039. You may be taking a little bit of heat on the long side.
Hey Joe, one call I did want to take a look at today was from Topeka Capital's Victor Anthony making a call on Google. And the story here is yesterday Gene Munster, the noted axe in Apple, raised his price target on Google shares from 985 all the way up to 1263, setting a new street high target. And then Topeka's Anthony this morning raised the price target to 1313. And if everyone can remember out there, I guess Topeka is notorious for these kind of funny numbers. They recently raised the target on Apple. What was it, to like $999, I think, was the first raise, and then after that there was like $1,111. So this 1313, Topeka coming in once again with a kind of odd looking number as a price target.
I tell you, the way those guys come out with those numbers is news to me. So if he's been on the bull train and he's making that projection, the only thing I would what's his name, Anthony Victor?
Victor Anthony, he had an $1,100 target on Google prior to this call this morning.
Well, first it's going to have to get through 1092.31. That was the all-time high from yesterday's trading. So got to 91.32 here. So resistance developing here in the 1291 to 1290 or 1091 to 1092
There you go.
area.
That's better.
In the Googster. S&Ps, we're negative on the day, folks. Made a low at 1800 here. The pre-market low of 1799 is holding up here. I'd like to tell you that I had some good support under that level, but I'd be lying to you. There's really not much.
There goes 1800.
Yeah, there goes Oops, there goes. What's that? A Kool-Aid commercial or something like that?
Oops, there it goes.
Or is that iced tea or something like that?
I think that's like, oop, there it is, right? Is that what you're thinking?
Come on, Joe. See me on this one. Oh, it's Joe not even on the headset.
Joe's not a hip-hop head, I don't think.
I don't know if it's hip-hop. I think it's just kind of...
What did I miss?
Not much.
Well, I could have figured that, but what were we talking about?
I always said, whoop, there was a slogan, whoops, there it goes.
Oh, man.
Ice-T. JH3 knows what I'm talking about.
Oh, yes.
Yeah. Well, Ice-T does love cocoa, doesn't he?
Okay.
Thanks, GH3, for that save out there.
I'll have to Google that one. Let's see here. What is going on in the oil sector here, Brent? Can you find me some news? Come on, Brent. Find me some news on ExxonMobil here.
All right, I'll make something up. Here we go.
Yeah. Exxon. Did it go ex-dividend or something? Or
Exxon? I can check. Actually.
Dragging down the market here. But let's take a look before we get too excited here on the short side. I mean, it's one of the big components in the S&P here. Taking a look on 94.89. We've made that low. The next support point is 94.59. There's support here at 94.59, hit a 94.89 low. Just the only thing about this issue is you did make a new all-time high at 96.25. Took out the that all-time high 96.12. Sellers gained back up at the $96 level. So haven't been able to identify any news yet on ExxonMobil. Shares of Chevron Corporation here moving lower as well. Perhaps they were listening to Ed Cahill from Lux Research and a little worried about the shift into the solar sector.
There you go.
But nice triple top that formed here at on the higher 123s in Chevron Corporation, 123, 88, 94, and 98. Perhaps we had some high freaks leaning on the 124. Maybe there was a big seller there at the point. Just like to alert our traders here that we are a nickel from yesterday's low in Chevron Corporation. So if you did get a short off the hop here, keep an eye on 122.70. See if it can firm up here and return to the 123 handle.
Joel, if you're looking at some of those integrated names, just an alert on Valero Energy Partners LP today. That is new issue VLP, a little spinoff from Valero VLO. I'm seeing a report right now, 15 million units to be priced around $23 per unit. Once again, that's VLP. And then also, if we're talking IPOs this morning, just seeing David Faber reporting a few minutes ago that the Hilton IPO could price at, where to go, $20, I believe. So that's going to be another a big IPO hitting the market. I'm not sure if it's today. It might be hitting the market today, but it's definitely sometime this week.
Okay, before we close out here, just a couple notes here. MasterCard did take out that pre-market high of 800 while it went to 801. A little bit of a lag move here, but Visa is catching up. Just want to just alert our traders to Facebook, which has had a really nice run here. But someone, hey, they put the foot down and said 50.77 is going to hold here. That was a high yesterday. We got up there early in the session, opening into resistance. That's holding. Psychological $50 level could act as a little bit of support here. So keep an eye on shares of Facebook. S&P's not really popping out of here. I just a little bit surprised here. We have missed a pre-market low by one tick, 17.99. So do indeed need to hold in here to get back, challenge that triple top here. If you're doing some swing trading here, we have identified a level on the upside, a major area of resistance. If we don't have any more questions, Brent, you have any previews for tomorrow you'd like to get on, or
Econ, we're pretty quiet this week. Let me check the earnings really quick. Get some traders ready for any earnings. We got a couple of decent earnings tomorrow. Actually, we got Adobe. That's gonna be after the close, and then before the market open tomorrow, we're gonna get some results from Lulu. That's kind of fun.
Okay, all right. Well, those are issues we'll be watching tomorrow. Thanks for participating in today's broadcast, and we'll be back with you tomorrow.